Hello, good morning, good afternoon, ladies and gentlemen. Hi Andre, hi Arne, hi Benjamin, hi Christoph, hey Dennis, hey Frank, hey Harris, hello Carl, hi Manfred, hey Myron, Oliver, hi Philip, RG, Shahin, Sebastian, Stefan. Good, so I'm just on air right now here, so you can hear me. Great stuff, guys. So let's see what we can do today. I've sent an email to you today because I was working yesterday evening my time here late into the night, and tomorrow morning here with Bookmap and Bookmap support to understand what we have discussed yesterday and to understand better what's really going on here with the data feed. And the final conclusion was that you need the NBBO data together with the EDGX, I think it is. So you need this data to receive the full depth of data here for the UV. And so far I know Stefan subscribed today, and as well Karen. Hi Srini. Karen as well, not sure if she's in the room, not so far, but maybe a little bit later. So Siri, just I'm saying that I hopefully worked out what might be the reason. Might be the reason for this data differences we received yesterday or saw yesterday, and this is most probably a subscription issue. So in order to receive all data, that means full depth of data for UVXY as well, and VXX, I will repeat it later on as well. You need to be subscribed to the NBBO data as well as to the EDGX. I think it is the right expression, EDGX data as well. We have two members, so Stefan and Karen subscribed already to this data feed, and we will compare it in few minutes when the market opens and see if the data are the same as I have. So thank you all for the discussion yesterday. It was really enlightening to see what we all have on our desktops or installed. That was quite interesting because first of all, in case the MBBO, what I doubt is does not provide a solution, but I think it will. You can adjust the trade finder to any instruments based on the volume. So trade finder is highly flexible. You can use then oh, Benjamin, okay, yeah, we'll see that. You can use the trade finder as well if you only receive or you see 10,000 in the book or for the UVXY. We can do that maybe today if we have time using TeamViewer. Yes, one of you should give me access to the team via TeamViewer on his PC or desktop, and then I will show you how to adjust it. But anyway, the best way is to have the full depth of data for every single instrument, and then we are safe. That's what I just recommend. Anyway, you can install the trade finder or to adjust the trade finder for every single instrument. Volume spikes are defined by volume, price, time, and ratio as an additional filter signal. Okay, guys, let's start. We are not complete, but it doesn't matter. First of all, I sent you an email about the outcome of all these discussions I have with DX feed and as well Bookmap, because it's vital to understand why we have these differences in the data. And second one, I've tried to upload the day 3 to the Vimeo platform, but it allows me only to upload 1 terabyte of data per week. So I will upload every single recordings of yesterday, today, and tomorrow next week to Vimeo, and I will post you finally all the links and download links what we done here of the seminar and of the live trading here to rehearse, to go through, and in case of interest you have the full access. And please again keep them with you, don't distribute it because they are uncut, not because we are making mistakes or whatever, but this is our personal data. So if we are talking, or if Srini is talking, whoever is talking, it doesn't matter, his name appears on the recording. And normally if I would like to, or planning to offer them in public, then I must remove all the privacy. That means all the names of this group here out of the video. But it's not planned to go public or to be available publicly, only for you, for our team here, and it's not intended to be distributed outside this team. Okay, that's important to say, and it's recorded, so if something goes wrong I can use the recording as a proof. If you have not received any email, I will give me a few minutes, and then along the day you should have you looked at your spam folder? You should have received. Everyone is addressed, no one is left. Okay.
Morning, Walter. Srini.
Hi, Srini.
This morning I went and got that NBBO. So it's interesting to see once market opens the numbers.
Yeah. Several other you, Karen as well, Stefan as well. To subscribe to the NBBO, we will see in a few minutes if this is really the solution for the data. What can we combine the NBBO feed with the X feed Nasdaq as well? You mentioned we should combine it with the ED at what's the pronounce how to pronounce that EDGX BM sideways. Yeah, you need EDGX in order to receive NBBO data. That's dependency in this. That's dependency. So if we will see that, first of all, guys, for those of you who does not have the subscription yet, wait until we see that in action when the market is open. I would like to so if you should have the email, but anyway, as well we'll add I've getting every day a bounce of your email box. I'm not sure what this is, but as long as you receive my emails, everything is fine. If please look in your spam folder. You should receive every day an update, the links and so on and so on. That should work. So most issue is with the spam filter you might have. Sorry, Frank, I just got to the screenshot about the end of this DX feed discussion. Yeah, I've sent an email to everyone of this group here. So okay, I've sent an email to every day. I'm just summarizing, putting the recording links in, and so on. Everyone must be addressed by my email, so please check your spam folders. Frank, I've discussed that with DX feed yesterday, and as well with Bookmap. yes, my time tomorrow here, and it turns out it can be it is most probable issue that you need EDGX, and NBBO data to receive the full depth of data. We will see that in few minutes when the market opens. When the market opens, then we will see what happens along the day, the next 2.5 hours. Okay, if yes, I've sent it, I will check that a little bit later with my distribution list here I have here. Let me note this, make me note this here.
Well,
okay, yeah.
3 minutes ago, so but just now,
Yeah, I've sent it to 2 minutes
okay,
before.
Yeah, I've checked everything, every folder, and nothing from you. Because
Okay, I will check your email again.
Thank you.
Yeah, I will check your email again so that you will for sure get this updates. Okay, guys, so let's focus a little bit more on trading today than it was yesterday, than we did yesterday. It's funny to be with you for at least for myself. So I'm relaxing here in trading, although I'm focusing and try to show you what we discussed in the seminar, what is really worth to know, to see in the market. And by the way, although yesterday was a little bit chaotic, or not a little bit, it was chaotic. It was chaotic yesterday, and what a positive. What a good point, a positive point of mindsetting of yesterday was the discussion. So I think suddenly you are aware that we are connected with with a lot of markets, and the connection between the ES, for example, and the volatility in the indices, especially UV, what I recommend because it's more clear than the VIX future. Gives you a big advantage in the market over the market. So the discussion was controversial, the discussion was funny, of course, and it was a little bit concerning what the reasons for the data differences have been. But anyway, it doesn't matter. It was a very good discussion, because I think in this controversial discussion you are starting to learn to see how to reading the SPY, the VIX, the UV, the VXX, the HYG, and so on, and that brings you finally, not necessarily this week or today, but maybe tomorrow, maybe the next weeks after the holidays, when you are back in trading, to give this method a try. Because as we saw yesterday on my charts, where you screamed that you don't see this wonderful signals, it gives you most of the time the swing highs. And when you see a swing high, then my recommendation is to see it, to feel it, and to go against it. In this case, we saw yesterday these wonderful signals in the UV, and you can go blindly then in the opposite direction with a ES future and make your money. That's the point. We are here to make money, and not to buy indicators or to watch indicators. As I wrote, I mean NBBO, if it works, NBBO. Yes, it costs money. It's you have to subscribe to it, as well as to the EDGX data feed as well. That's really it might be expensive having a lot of indicators, but what I have had a discussion this week with another guy. It's simply the question: what do you want? We want to make money here in this market. Do you need every or any indicator you are subscribed to? Because most of them are simply expensive, or not expensive, but at the end it sums up. You have to pay a lot of money maybe you don't need every indicator or every add-on. So look at these correlations, go back to the documentation, and you will see that you probably don't need to spend money on other things. Okay, that's what I wanted to say. So coming to the news, we have 10 minutes left. We have 10 minutes left here. Coming to the news, yesterday the Fed promised interest rates hikes next year, and they are going to unwind the tapering sooner than later. I think it was March, and the market accepted the message that the labor market in the US is very, very strong. So, and that led to this wonderful 100-point up move into the 47 area. We didn't top the all-time highs. Oh, did we? Let me just. I think we touched. Yes, we touched. Traded. The market traded above the all-time high here. So the market is extremely positive. There's extremely many money in this money in this market, and this is an extremely high speculative positive market. It doesn't matter what's behind. We should go with the market. And if the market is simply telling us buy, then we will join the market on the buy side, of course, and vice versa if it goes down. So the news are a little bit mixed as well. We have, labor market in the US is okay. Let me say it that way. We will see what's a little bit concerning when you watching the economical data. Let me find my page here. The numbers. When you go through the numbers here on the, what is this here? Okay. On the eco data news, you see the housing starts. They are quite good. Then the initial jobless claims are a little bit higher than expected. But not so dramatical. That's nothing really bit of a big concern here. The Philly Fed is down. That's remarkable. Philly Fed is down. All of the numbers are down. Capacity utilization is okay. Industrial production is down, as indicated here. Is a little bit more lower than the year-over-year numbers. And what we are awaiting in 22 minutes, keep in mind, at 9:45 Eastern Time are the manufacturing PMI, and that is the last important number for today. And then the market will try to find a direction, I suppose, today, either up or down. The projection, what I'm seeing here on my numbers, are simply that we have this gap down to 4,700. This is the 4,700 area. Maybe the market is overbought, of course, and it can trade into 4,700. Although we see 47, 27 and 37, 40-ish area. 41 could be the next trading level. Keep in mind when you're following spot gamma, call wall was all the time at 47.38. Which is maybe a remarkable, not sign, but a remarkable, remarkable marker here for the market. Let me see. Yes, a remarkable marker for the market call wall. It does not mean that the market is not able to trade higher, of course. That's not the point, but just to keep in mind that we reached the market at this call wall, traded above exactly in the institutional level at 42, which is really remarkable. I'm amazed every day when I see that. And then we have this 4,700 area below. Let me have a look. Let me show you what I have on my UV. We have more pressure to the downside on the UV. That means you see this very nice 13 1389.90, this area, this liquidity area here at 1392. By the way, the wicks dropped very hard from 22, 23 to 18, that are currently reading 1872. So that means that's really a hard drop of 5 points since yesterday. That's a lot of. We will start normally a session with a gap down in the VIX. So that's what I see on the UV. But when I'm watching this one, you know, when the volatility drops, then the indices will trade higher. I see 1480 as well. It's a little bit more brighter than this one. It's relative, you know, the liquidity is relative. We are counting at the moment on my chart here 33,000 at not 1319 and 10,000 at 1480. But still in the book, still there. So don't forget it. If this becomes a good support here, the market might trade into 14. Oh, right now they canceled it. You see that? They canceled it right now when I was speaking about the 1480 here. That's really remarkable. Let's see if they even. Oh yeah, they maybe they're expecting 1540 as well. So anyway, just keep that in mind that we have this two directions. The most possible part is that the market trades up into 1390, and we will see what happens around here in the UVXY and 1390. If you watch the VXX and you have the VXX as well on your chart, then keep in mind that we have a very nice liquidity at 2020 and 2060. 2020 and 2060, and that means that the market is still maybe targeting this 2060 as well. On the other side, we have a very nice support at, or not supportive, but on the bid side at 18 and 1850. If the market really trades down, then this could become a possible target, but then expect the ES to simply jump above all-time highs and trade into 47, 50, 60, 17 and maybe higher, but not necessarily today. Keep in mind tomorrow we have the OPEX expiration, and that means that could be and will be a volatile day as well. So what to expect? I don't have a really clear picture. I'm just watching what happens in the volatility indices, and not sure if James is around or every one of you. If you are watching this constellations, that means SPY, the VXX, UV, HYG, and the wicks on. Let me check of. Oh, okay. Comes from that. When you watch this indices, so let's watch for divergences. This is a really exciting signal. You see what happened yesterday here, and you see what happened yesterday on the volatility, in the volatility stocks, ETFs, and so on. Double bottom, that's what we want to see. That's what we want to check. That's what we want to recognize, and then we will know that in this case we have to buy. We are buyers in this case, and that's long before the market starts off here of this price here. That's what we want to see, and this is again a wonderful signal. So from my side, everything is in what to expect. Inflation, and we have had this review. Yesterday's review was interesting again for those of you. Oh yeah, thank you, Eve. Quarterly options, as already stated, yes, quarterly as well. So we will see at latest tomorrow. I expect, at least based on my experience, I expect a high volatile day tomorrow, based on the option expiration. And by the way, guys, based on yesterday's discussion, I think every one of you learned, first of all, that we are very flexible with adjusting the trade finder to every single individual market condition. That's really great. That's fantastic. So if you understand what Dalton mentioned, volume, time, and price, you can set everything based on Dalton's on Dalton's rules. Trinity, yes. I call it the Holy Trinity here. Volume, price, and time. So that's first one. And second one, you understand that the correlated markets are important. And therefore, what I mentioned in the rules is simply I just want to understand what the market is doing and then taking action. Even if I'm not getting the entry, even if I'm not getting the entry in time. So I mentioned I'm not chasing it because you know if you miss the entry and you're chasing is 2-3 points, you get a fill at 2 or 3 points higher or lower, whatever it is, then most probably my experience at least is that the market is going immediately against you, maybe give you 1-2 ticks and then turns back and goes against you. That's why I don't like chasing a market, simply not to get my fingers burned. That's all. Oh, great, Karen, you wonderful, love you. Love you. That's great. So you know, guys, I resetted everything yesterday evening. And I talked to my guys here at the X feed as well. And tomorrow, early in the morning here with the bookmap folks, and that's great. That's simply great, fantastic. And I have a rough night, so just to say that because I was concerned, why do we have this differences where we should have the same data? Thank you very much, guys, and that makes me really happy that we have solved that. And now let's focus on the market here. Market opened with 1,400 ADD. Watch this, 1,400 ADD. That means the broader market is positive. The tick is below. Oh, it's above 0, 400, reading 400. It means that's very positive for more upside. At the moment, that's currently a snapshot. Then we have the VIX opened with 1878, which is 4 points or 5 points lower than yesterday. And you see that here the gap 472, the gap is 470. That means if the market trades into 470 or 4,700 on the ES, we will be very cautious with that. VXX as well, gap down as expected. The high yield bonds as well gap down. When I'm looking at the correlated market, let me just have a look here very fast on the what happens is the yen is up, strong, gold is up, and then the treasuries are down. So 2 years ago I would have said, okay, the market is neutral or bullish, neutral to bullish based on this correlation, especially a US dollar yen and the treasuries, but it's rising, started to rising again. So be very cautious.
Sell volume spike.
Be very cautious with the upside. Okay, good. We have, keep in mind, in 10 minutes we have the PMI. I'm not trading right now, so just watch the PMI in 10 minutes. and based on the UV, still more downside oriented. Wonderful. Let me show you what I see here on my chart. Wonderful liquidity at 13. Very strong. 571,000 here on 13, and we have a little bit more. Oh, not it's even not comparable at 15-ish at this point. So when we stretch that, but that's really a strong sign. If they are really, they're meaning it really seriously to trade in the 13, we will see a bullish market, bullish years.
ESH2 by volume spike.
I'm just comparing the quality of data with the X feed. Yes, 106. Yeah, they are nearly the same.
SPY sell volume spike.
Extremely volatile.
ESH2 sell volume spike.
Extremely volatile at the moment. Because you see there's no liquidity around between 47.10 and 47.26. You see this is a black area here, so you don't see any support resistances.
By volume spike.
I'm not sure what the market is doing here so far. We have this 47.10, then 07, 05. Keep in mind the institutional levels. Yesterday's low settlement for 4700 could be a good point, could be a good target, and the market is strongly overbought.
EXX by volume spike.
I see I have to readjust my settings because I left them with same settings or with the settings I played around yesterday.
Walter, what's your volume on the UVXY? No, the trigger, the spike, V spike.
Okay. Yeah, sorry. I set it now to it. I left it as it was yesterday. I set it to 100,000. I think yesterday it was 180,000. So
1 second,
So I just didn't change it because I played around here with you on this settings here.
150.
150. I'm just trying this 150 here, or maybe starting even with 100,000. Let it 100,000, then adjust it again. I'm not sure if 150 or 100.
Keep two.
Sorry.
Keep
Yes.
Two
Yeah.
on the ratio.
Yeah. 100,000, 30 seconds, 8 price, 8 ticks, and ratio is 2. And my absorption trigger signal is 70,000. The interesting point though is watch it how they are supporting the up move right now, and that's what I have expected. So by the way, there was a sweep. There's a seller who sold 2074 contracts here. 2074 contracts right now here. So not bullish right now. I'm waiting for more confirmation. But
ESH2, sell volume spike.
Well, wonderful to watch how this DID
UVXY
was
by
simply
volume spike.
lowered to 47.05. You see they're going to go to close the gap here. Most probably going to close the gap. HYG is slightly up. So just wait. We have an announcement in 4 minutes. Keep that in mind.
UVXY by volume spike.
I think this 150 should be good, Srini. Let me do that with 150. Yesterday I had 180. So just to catch this bigger volumes and bigger swings. The overall market is a little bit more. It's not very clear. Look at my screen. Excuse me. NQ down. Yes, is neutral. YM and Russell are greenish, but not so much. So it's a very mixed picture. ADD is down from 1,450 into 1,000. Tick is below zero right now. Everything is bearish at the moment. VIX is rising, which is good. You see very nicely how they are simply pressing on the bid to the upside. One minute or 1.5 minutes.
There's 1 minute remaining now. I'll be reading the US market manufacturing PMI flash first.
If you are in, stay off this market. 45 seconds.
Seconds. $57.8, 57.8, and that is the US market manufacturing coming out 57.8, and that is lower than the forecast of 58.8. Sorry, 58.5 the forecast. US market services PMI flash at 57.5, 57.5, lower than the forecast of 58.8. US market composite PMI flash out at 56.9, 56.9. Just to repeat, US market manufacturing PMI flash came out at 57.8. 57.8 is lower than the forecast of 58.5.
You know, the most interesting point, or fascinating point, not interesting, but fascinating point is, we see this negative data. So everything is down, PMI is down, then Philly Fed is down, then the inflation is extremely high, and this market buys every single negative news. Every single negative news. It's simply amazing to watch that. The labor data are not so exciting. They're not bad. All other data, PMI, the price index, inflation is high. You name it, you can read yourself the eco data. And the fascinating point is simply that every negative number is being bought.
The IHS Market Flash US Composite PMI for December, the full report is available on the feed for those interested.
ADD jumped up. Tick is around 0. We are up. The volatility indices, think we can say, oh, it's not perfect, but they closed the gap. It's not perfect. Yes, it's not perfect as well here. Yeah, it is. It is. If a trading opinion is, yeah, I can confirm that it's dead wrong. So I'm just waiting for the market to show me his hand. If you are playing poker, I would like to know what's in and to see what's on the table. What cards are on the table at the moment? I don't know anything. I know the market is. We have more. That's the interesting point. So we have more liquidity on the downside. On the upside, we don't have so much stuff here. That's black here. It's black. We have 27. We have good liquidity there at 4,700. Here. Still an open iceberg here which was, I don't see what's behind here, this iceberg. ADD's
UVXY by absorption.
ADD is strong up. ADD is strong up here. Look here. 850 to 1,344. 1,344. Very hard, big jump into the overall advantage and decliners here. Advances and decliners, excuse me. That's up. You see, that's positive. That's bullish.
Walter, the second iceberg is 1,613 open.
Which one? Where? Here?
Where you can't see the ladder.
Ah, okay, okay. So this is still open. It's going really to be very interesting right now. If they are going to hit it again, and that if that means if they are going back, yes, if they are going to trade against 05, then they must trade lower. So I'm patiently waiting. Maybe that's, you see how the point is where to start, where to go short here. That's a little bit more tricky. On the other side, you see the CUV. It was a high absorption at 1412. I would have expected a volume spike at 1412 or something. That would confirm my position. Nothing happened. Let's have a look at the broader market here. UVX down, as you can see, very nicely, or up in this case. The sectors are, let's go to the sectors. Semiconductors are red, retail is red, pharmaceuticals green, transportation green, banks green, semiconductors red. The global index Nasdaq is red, and the 100 Nasdaq index is as well red. And all the apples, the FANGs, except of Google, are red. So we have more on downside, still a downside, than the upside. But you can see it very nicely on your chart. See that black area above.
What software was that?
Sorry?
What was the platform? You showed the broad market.
That's the XFeed. That's the XFeed viewer. Let me show you that. That's the XFeed viewer. I have simply summarizes all the main indices, and then I have all this nice declines, advances, and so on and so on. Here is a sum to sum up what to see the market conditions here. I must say it's a courtesy of the XFeed here. So I'm just watching that. By the way, that's the UV. I compare that with a bit size and ask size yesterday to understand fully why we have these differences. And I'm glad that it turned out it is simply the MBBO stuff you have to add. So sometimes it's interesting to watch, because you see when you analyze an instrument to see really the data, you see the time, the ID, the order ID, and what they are doing, conditions, what size they are selling or buying in this case, the aggressive buyers, and so on. This is quite interesting to for analysis if you want to dive a little bit more into the structure, to the data feed, data structure, and that's a quite nice overview. But that's just only for excuse me. That's only for informational purposes, not to trade. So you look here, guys. That's quite interesting. Let's watch the 4705. They are approaching 47.05 and we have 1,000 behind. The point is we can't do that a little bit better because Bookmap's API doesn't allow to code for the for the Z index, so we can't hover over an, how to say, label and bring it to the front. Oh gosh, I missed that. I missed that, guys. Look here.
UVXY by absorption.
Here. Watch this. Have a look at this one here. That was a buy here.
VXX. Sell volume spike.
It's not said that they are not going to trade into 05, but it was a buy. Ladies and gentlemen, I kindly ask you to focus, to be concentrated. I missed that one here. I'm watching this 05 area right now. Let's see what happens here. Really interesting to see, and see how this institution, or who is behind, is patiently waiting since 22 minutes and 16 minutes. That means they started here. The first one started here, and the second one started at 9:33. It's coming home, it's coming home. We have one at 47.05 and 47.03. Liquidity is 05. And we have the gap at 4700.
VXX by volume spike.
I would come on. Let me see if I can get one at 04.
Is it buy, Walter? Buy,
Yeah, I'm looking for a buy. I'm looking for a
Sell
buy here.
volume spike.
Does he lower at 020? He lowered his position here. Watch this 4700 area. 4702. Just give me let me just focus on this price action here. 2,500 traded.
ESH2. Sell volume spike. ESH2. Buy volume spike.
Trying to catch for 03. It's not finished yet. It's not finished yet.
ESH2. Sell volume spike. ESH2. Sell volume spike.
The interesting point is no, I'm simply didn't took a trade. I was 03. I waited for 03. It went away from myself here. It's coming into this area again. Very hard to find an entry here. I'm not sure. So I was looking for a long here, but didn't took this long here. We are in the institutional levels here around 95. Dropped off this one 95. Can take some time to trade around, then waiting for a signal, guys. Gosh, what's going on here?
ESH2, sell volume spike. ESH2, buy volume spike.
I'm watching this price action, but I didn't do anything here right now. Simply don't know what to do here. We have good support at 495 here. It's pointing more to the downside here. That's not a buying market. Based on the 100 jump points jump up, it's simply a selling market.
SPY ESH2,
Yeah.
sell volume spike.
Yeah, VX axis up, UV is up, the weeks VIX is up, ticks are down, ADD is coming back. That's
EXS.
I need, I'm looking for a signal, so it's very hard to find any entry. The average liquidity is around 100. That makes it more difficult to trade. We have had 2,000 sells, so more than 2,000 sweeps, sellers here in the market at the beginning. 2,500, 2,000. Then there was a 2,002. So that points more to the downside. And as you can see, and what I mentioned is, it's here at that point, it went up. The question was where to sell it. It went up, but there's no liquidity over there. We have more attraction to the downside. Than to the upside. And Q is the loser of today, so the FANGs, or maybe the technicals are selling. Or let me have a look here at the broader market. Yeah, they are all down here. So the Nasdaq is simply losing today. That might contribute to this down move here. Just give me a chance. Just give me a chance to sell it. Nasdaq is deep red. Nice divergence here, missed at the 2. The interesting point is that when you look at the broader market right now, we have had, no, it's not perfect here, double the bottom here. And what I see at the moment, HYG is rising here. HYG is rising a little bit, so there's a relief in the market right now.
VXX by volume spike.
So sorry, grab the coffee here. As long as NQ is red, maybe profit taking, it's going to be hard for the market to rise.
Hey Walter, this is Frank.
Yeah, hi Frank.
Hey, could you put up your UVXY screen just real quick? I want to compare your market volume and liquidity to mine. Yep, good.
Great.
I think I'm finally with you.
Oh, great, fine. You make me so happy. Every one of you make me so happy because it was really, yeah, not a pleasure to work this out here.
I appreciate it. Thank you.
Yeah, you're welcome.
According to sources here, ECB policymakers disagreed on the inflation outlook and some stress upside risks to the new forecast. ECB hawks are unhappy about extending the PEPP reinvestment to 2024 and not setting an end date for APP. So specifically, governors of Belgium, Austria and Germany did disagree with parts of the ECB's decision today.
So guys, I'm sorry. But I don't have any idea what to do here. So if you have some, let me know, but I don't see anything here. It's going up and down. We have had some nice resistance here. Yes, resistance at that point here as well. Absolute liquidity changes. Went down for a few points. Hard to say anything right now. Although I'm in hindsight telling you you see this one, the retest. It was not a perfect divergence here based on this data here. On my ninja stuff here, kinetic. We have seen better signals. By the way, the first one, let me just go back here, what I mentioned before. That's a nice lesson for...
This time at the bottom of the hour, we do have the US EIA natural gas change forecast.
When the market starts to trade here into this liquidity and then it went up, what I mentioned is that there is no liquidity above. So the question here is simply where will the market start? So you can sell it here and fade it all the way up. It's quite a little bit dangerous if you do so. Adding to a losing position is always not. Adding to a losing position is not an option. It should never be an option.
And Walter, I just wanted to confirm, on your volume spike on the UVXY, you switched that from 180 to 100 even, right?
Let me have a look here. No, I switched it to 150.
Oh, 150, okay, got it.
Let me check the 100. I played yesterday with all the settings with my data, and then I forgot to switch back to 180. Let me see 100. What happens with 100? Not bad, but it's a little bit more noise in between, so it's a little bit. I would like to have at least 150 to be sure, because this is a significant size. You can set it to 100, but it's not bad, but you have some wrong signals along the way here, along the way up or traded, or along the price, and that's what I don't want to see. Just keep them 150. Let's see if that works today. It depends on market. It depends on market volume. Currently, we have. Oh, I'm reading here on my side, and I suppose you will read it on your side as well. Quite low market volume and market participation in the UV. So 150 might be good. Let's see what happens here. We have had, by the way, now hindsight talking, all this volume spikes are good for a counter move. They're extremely fast. It's really hard to catch the move or to get the best price. In this case, the lowest price. This retest was nice divergence. That's what we want to see, even if I'm fighting for a few points. So let's see for 47.10. Imbalance tracker is pointed to the upside. Keep in mind there where the imbalance is, the market tends to trade into the imbalance of the order book. Let's have a look of the all markets here. VXX is advertising with a 20 level here. We have a 2084 level as well here at this point. By the way, the signals here have been extremely well today. Not sure if I got the sound signals here when the market hits this high. Not sure. So please, for those of you who have Edge and NBBO, look at the UVXX. You should have the same settings on my as I have. I recommend 180,000 in the VXX, 60 seconds, price actions 10, and ratio is greater 2 or 2.2. That's what I have here on the VXX, and it works quite well. We have 20 now. Yes, 20 on the downside. If it goes down, then we will see higher prices in the indices.
Walter, can you show me again your settings on this? I can take a screenshot, please. Thank you. Got it. Thank you.
The hidden orders are they are only synthetic. I set to 25,000. I mean, we should let me check that. We should play with them because But nice signals as well here in the VXX. Perfect ones. Perfect ones. Still, when you watch the liquidity, average liquidity on the ES is 110, 120. It's not so bad. That means that this is not a completely sell-off of the market here. It's not a complete sell-off or total sell-off. In this case, we will see 70, 80. But 120 is somewhere, something in between. We are approaching VWAP right now and 47.15, which is an institutional level. Yeah, it came perfectly together here when you watch the VXX. This is the signal here at the top. We have two. We have had two. First one here, and then this. We have three, by the way. But every one of them worked. It was a little bit shaky because you see this high volume traded, and your dome price ladder is jumping up and down. So the third one came together with a volume spike here, really perfect. For those of you who are using Bookmap right now, is you have this synchronized chart symbol on your in the Bookmap, synchronized charts. And if you want to synchronize all your charts, maybe you have one or two screens or several screens, then synchronize your charts, then everything will go or be in sync. So that will help, of course.
The trends. Could I see your ends in the screen?
Now we approach this institution level at 15. There's no chance. Look here, they want to go up, they want to go up, they want to go up. They're pressing it with the sweeps up, buying, buying, buying. Next level should be 27. That was too fast. I was long here, but it was too fast. I couldn't even trail my stop here. I saw this sweeps and then I just joined a bit here, but it was too fast. I don't know. I was stopped out here for 1 tick or 2 ticks. And then this, you see, this liquidity came up. So at that moment, I was sure to go long here because of the sweeps. But it came against me very fast. I haven't had a chance to trail my stop, but that's okay. Let's do an overview of the market here. That's quite important. You see the liquidity at 90, and 90 was cancelled here. They simply cancelled the 46.90. That means the market is finished right now. The business is done. Even if the market comes back or trades down again, 90, we will yes, possibly see an adding liquidity coming up here again at 46.90. Keep that in mind. So very nice signal here, double or retest double top, then they cancel liquidity. At the moment we have the only attraction to the upside is 15, which came up right now. It wasn't in before a few minutes, and then we have 27, which is really weak. I don't see anything special at the moment in the market. From my point of view, we have more on the downside at 14 in the UV and as well in the VXX. That means everything is pointing to the upside based on that what we see right now at that moment. That's what I have here. But remarkable is just that one here, 46.90. If the market trades back down, keep in mind that this liquidity might come up, and keep in mind I love my pattern, which is I tell in that's the holy grail, the 100% pattern. It's the business done pattern. Watch it simply. When it comes back and they are adding at 46.90, then they want to defend this area. And by the way, this institution level is 47.15. This amazes me all the time. The market stops there for some reasons. Who knows why? I don't know why. And then it stalls. It simply plays around here, the 14-15 area. By the way, it's as well the VWAP, daily VWAP here, 47.15. Very nice to see for those of you who are using the Market Volume Pro, which is very similar to the stop run indicator, is that the market comes to a rest here. You see, it's simply not trading anywhere, trading around the zero line here. And why they have chosen 15, I don't know. Maybe because of the VWAP. Maybe because of this institutional line or this institutional level. And just to keep you awake, think about, keep in mind this hard sell-off at the beginning, and sweeps 2000. Let me have a look here a really bit closer. At the moment I don't see anything really special here. At the beginning we have had here 2,500, 500, 2,074. This is 5,000, 5,074 contracts have been sold at the beginning. 5,074, 2,000 plus 2,500 plus 500 plus 2,074. These are 5,000 contracts have been sold, and they have been collected most probably here at that point. Look here. This is simply, when you know what to watch for, it's simply amazing. Look here, 1,074, 2,500, and 1,000. So when we are focused and understand what this market is doing and the sweeps, you see 5,000 contracts sold, 5,000 contracts covered at 4,700, and the average was maybe 47, whatever, 18, 15, 16, and he covered 5,000 contracts for 16 points, 15, 16 points. That's not bad, guys. 5,000 contracts. That's our goal. I mentioned before, when the price is coming back to the 46.90 here, you see what happens. Canceling or reducing the liquidity here at 46.90, reducing and then coming back to 46.90 here, adding liquidity at 46.90. It's nothing dramatical, but you can now read the market this way, that when the market maybe trades back, maybe 4,700, 4,700. Keep this in mind, 46, what is this, 95, 96 is a double bottom here. They will add again to 46.90. Keep that in mind. You see, there are so many information, so many beautiful information. You should have, beautiful is maybe the wrong word, but facts. Someone was selling 5,000 contracts at the beginning, and he covered at 4,700, I think. 5,000 contracts. You can do your math on your own here. What he earns today in what, 30 minutes?
VXX by volume spike.
That time I've got a fill here. Would be nice to see 15. I'm or 1 in. Give it a little bit more room. That's the speed I can handle. Now it depends on if you're a scalper or not. You know, it's a good try because I have my got my first 2 points, then I'm still 1 in at break even, and it's a try. So let the market prove that you're right or you're wrong. That's simply, I can't do anything right now, so I can cancel my order or put it off the table here. That's the 1 point. I can maybe, when I'm lucky, when the market proves me right, then the market goes towards 11, 12. So I'm out here break even. That was a try because in this case I was as concentrated. That was a very nice signal here. It gave me 2 points back, 1 break even. It was not very successful because it simply stuck somewhere in between. But it was based on that what we have discussed on the third day in the seminar. That was the one signal. Then the second one was here. Just waiting. That was another one. So for sure, this absorption, so missed that as well. Watching the 4690. That could be a quite interesting area, by the way. Mm. That's most probably the first touch is not bad, but they are retesting this area of 7. Building a nice divergence, and then yeah, we will see if it lifts off here. But this is really interesting, 4690. Look here. The fangs are really bad today. No, here. Yeah, they are all red. All the technicals are red here. All the technicals are red. As well, although the sectors are mixed, volatility is up, and ADD is not bad. So we can't speak of a negative day today. Look here, I was long here. So 47.05, 0.25. But you know, I have to out. I must out them. Yes, I have to say I hate losses. So it would have been better to give him a little bit more rope. But this long was based on the fact that the VXX is simply trading a lot of volume here at that point. Now it's the opposite side here, as you can see. And that was the reason and the rationale for myself to take the long here. Because the market signalizes or gives me the signal to go long here. £7, not bad.
Hey, Walter.
Yeah, hi Frank.
This is where we get to exercise patience.
Yeah, yeah. That's really the point. So you know, what I'm no, it's every day is a learning process for everyone as well as for me as well. So, but you know, the entry was perfect. I've got one out, and instead to lower my stop maybe to 1 point or 4 ticks lower here, because it's most of the time I'm really too early. That's my lesson. I'm an early adapter. I'm taking the first leg and the second leg. Most of the time they are retesting this area. They are retesting maybe 3 times this area where the entry was, and then they are lifting off. That's the point. Simply, that's an individual learning or exercise or whatever to do that. And that's by the way a part for the psychological part of trading is mindsetting. Just my recommendation is to meditate and then keep and visualize this kind of entries. Visualize that. When you start with 2 contracts, then take one off, and in this case, theoretically, practically speaking, it would have been better to keep the stop 4 ticks, 5 ticks below the entry, because it's not a it's not a gain, but it's not a loss. So that means you are break even for a few cents or whatever. It doesn't matter. And then waiting until this retests, and then it lifts off exactly in the area where I was looking for 14.15 here, and that's the And if you are in, then if you are sure the market is trending, then add one, so that you end up with maybe 3 or 4 contracts. That's the best way. I'm just using two. I'm just using two just to test the market, to see if the market gives me wrong, proves me wrong, right to me.
Yeah, no, that was a good trade. I mean, I was following you while you were making the decision to do it.
Okay, and the reason for myself was this. So I have had the time to execute, to find the entry. The market came back. I have enough time to manage it. The first one here, that was a little bit messy because I was chasing it again, and that's always the wrongest part to chase, because if you are chasing it, you see that there were sweeps of 444, 2 sweeps. That means they are normally, you can say in the trending market, they are supporting the up move, but it comes suddenly to a stop here. It was not visible. It was not there in the chart when that happened. Here, it was not in the book here. It started when a little bit later here, I think it was as well. I saw it, so that was too late, and it was extremely fast. So it went against me extremely fast, and that's what it's not possible to manage. So again, if you're watching VXX and as well UV, next signal came in here. Maybe it's only fight for few points here. But you're not in a losing position. You know what you do. You know every second of your trading career. You know what you do.
Yeah, now that it seems to be that I'm getting the same full feed that you're getting, the signal, everything just kind of fits together.
Yeah. That's really great. So what you gave me, and all the other colleagues here, ladies and gentlemen, what you gave me, I'm sure I can sleep very well this night. So, oh yeah, that really, Frank, that's really of concern, because if something doesn't work, so I make really, yes, I'm a little bit in trouble with myself to understand what's going on, because it's not logical to have this different data feed than you have. That's simply... Yeah, it's totally off, totally odd.
I don't know if Srini can hear us, but hey, there he is.
Yeah, I can.
Hey, what are you showing, since we're both in the same time zone, in the same area, what are you showing for market volume and average liquidity on UVXY?
Oh, I mean, I checked. It is same, exact same as Walter. So okay. I can let me tell you now. I can tell you. See, okay, market volume 57,000, 56,000. Yeah.
It's the same. Great.
In 700s.
Yeah.
Guys, I wish we were together here in a room in person here, and I would spend whatever you want, beer, wine, whiskey, or coffee, whatever you like, and then enjoy really the next today and tomorrow, because that makes really my life that enriches my life to a lot here, to be with you and get all this work out and have fun a little bit here. So as I mentioned, a little bit sad because I didn't took the 7 points out of this market, although it was a perfect trade here, perfect entry. Doesn't matter. We have had another one. We will have for sure another one. Here and here you see how this works fine. Yeah, Alex, the point is, this is possible because my team, my great team, developed this trade finder, and we have had a lot of not only hours, but days spent on the discussion how to design the trade finder. I mean, developing or coding icebergs and so on. That's really nothing special, because every one of you, especially Srini, I think, could make can coat icebergs. Everything is there. Everything is public. There's nothing. There are no secrets at all. But to understand the market is a little bit special. So you have to understand the market. When you understand the market, you are looking. What do you want to see in the market? I would like to see the sweep. The swings, the swing high and swing low. So, as we discussed yesterday, I think it was Chris. I think with Chris, so far I know, is if you're a scalper, you want to see the smaller swings here, smaller swings high, low, and so on, and so you know what I mean, and you can then simply find them when you change the volume and the duration, the time and the size of the ticks. You can find them all. The question is, what are you going to trade? What type of trader? What are you? What type of trader are you? What's your personality? Would you like to have to stay in the trade for 1 hour or so, or would you like to scalp for only a few seconds? It depends really on what you want. But what we wanted to develop is to see to have the flexibility to find the swings, and you can find the swings based on the volume spike signal. Once you understand that the volume, time, and price are crucial, again, this is the Holy Trinity. Read Dalton. If you don't believe me, then you can literally do anything here. And what I'm just trying added in the seminar is not only to show you the option, the options are an important part of the trading of the market, and the volatility is what we can see and what we can measure. So either you are in options, then maybe you can follow spot gamma, or all the numbers of spot gamma are publicly available at your brokers, for example, interactive brokers. Or if it's really too complex for you, then subscribe to spot gamma. Or then trade the options based on that what you see in the book, on the options in the options book. But on the other side, if you want to follow the volatility, because volatility dictates the market, then you have these three options: VX, UV, and the VIX. And for the NQ, as mentioned, we have the QQQ. So we have this instruments. I'm not aware about instruments for gold, for oil, for example, and so on. Maybe US dollar will be the best to trade. If you are trading oil and gold and euro dollar, for example, or others. Soybeans are great to trade. By the way, Treasury, ZB, ZN, ZF, absolutely amazing. If you have time, if you're patient enough, trade ZB, trade the treasuries. You see what happens here right now. Watch this 4690. Watch this 4690. Excuse me. Just Alex. One thought on that. What I said is, 15 years ago we didn't have had these tools, so that's a problem. 15 years ago I even didn't know what a bid and ask is, so it didn't matter. We have had other tools, indicators. I was in Elliott waves, GAN, and whatever, harmonic pattern. You have to start with something. So today we can better understand the markets, and that's really a big advantage. If you want, of course. So. To point you to the 4690 area again, liquidity, break of liquidity came in. You see how liquidity adds when the price trades or not trades towards, but it's coming back here to 4090, 4690. Breaks again because it's far away. Now it's coming closer, and 4690 comes up again.
SPSH2. Sell volume.
Oh,
spike.
look here. This is one of our friends who is selling 3,000 here. 3,000, guys, 3,000. That means he is in the market with 3,000 contracts at, I don't see the price here. He's 4,700.
By volume spike.
He swept 40,000 through 4,700 with 3,000 contracts. That's not a bullish sign.
VXX. By volume spike.
Yeah, HYG is now turning back here. Didn't close the gap here.
Walter, is HYG a bit more slower?
Yes, it is. It is. It is.
But it is kind of a real good confirmation.
Yes, it is a fantastic one. Not every second, not every tick, not every second, but most of the day when you watch it, you see here how they are simply following. That's a great. That's really a treasure of no here. That's a treasure of how to say. Let me say it's not an indicator. It's the high yield. But really, I love it because it shows me most of the time the direction of the market. Most of the time here, you see it's going sideways. It's not dropping. It's not rising. So if there's no rising, that means this is a kind of divergence as well. You see, it's going simply sideways here with the market. It's not doing anything, so it's not rising. That means that the market will. ES or SPY in this case will not rise, will not go up. I would highly recommend to put it on your chart because mostly you have it already. but maybe not aware that it's so helpful.
Walter, I was just wondering, inside Bookmap, do you watch anything in HYG? I mean, volume spikes, you don't look at that.
Yes, I have, but I have too many. Yeah, I do so.
Okay.
I do so, but I have too many charts on here. That's my problem. So I have it here. I didn't adjust it. I would like to simply have it put it on the Ninja Trader chart here, for example, to have a little bit better overview, because this HYG is slow, and I'm not sure if the volume spikes works very well with them. With HYG, I have to watch it. Yes, to adjust it. Maybe this evening as well. To see if we see something special here. Not sure.
Okay. All right.
But I have it on the chart here. But I'm watching the VXX. I'm watching for the volume spikes, and then the correlated markets here, just to get an idea what the market is doing. So the last trade was a perfect one. Let's see, this 46.90 is quite interesting. Quite interesting. Let's watch it. You see the support they are building at 46.90. By the way, institutional level as well, 46.90 or 46.91. The next one in 86. Someone is short 3,000 contracts. I wouldn't wonder if we see an iceberg or something, or development, DID, dynamic iceberg development here. Let's have a look at 46.90. I'm sure they are going to trade against 46.90. Be very patient now. At the moment there's nothing to do. I don't see any trade. Mind the 2080 in VXX. Look here, this is the iceberg. It could be maybe one of 1000 or something, 1500, let's see. It's not time now, it's not time. At least for me. We have a nice divergence as well. Let the market trade against 92 again, or come back to the 92, hopefully. But on the other side, we don't have anything here on the upside here.
I've got the entry at the deep, the dip.
Okay. Great, Stefan. Great. Absolute. You make me happy with that.
VXX. Sell volume spike.
Was it cancelled? I didn't see one. Was it cancelled? Yeah, it was cancelled. The iceberg was cancelled silently. No, Alex, no. No, they don't work overnight.
What if you open VXX? That liquidity addition at 2080.
Mm-hmm.
What do you make of that? Or you ignore that, or?
I'm just watching that because it's quite important to see if they are adding to 2080, and that means the market will, or VXX will trade against 2080 because there is a higher liquidity at that point to the 2080. Let's see if it comes true. So they defended, first of all, they defended this area. You see, it's a little bit brighter than the first part here of this liquidity here. And if they are trading against 2080, it will become darker again. Maybe they are going to defend it. That means the market will try to
SPY.
trend
Sell
to
volume
trade
spike.
against 4690.
Yeah, I'm thinking it will make one more leg to the down. I was based on that.
Yeah, don't know, but it may be. Yes, of course, it may be. You mean the VX? You are talking about VXX or ES?
VXX. I mean, VXX based on that liquidity.
Okay.
I'm thinking ES will make one more leg down.
Okay. Yeah. Into
Assuming
46.
that,
Yeah. Into 4690. Yeah.
something like that. Yeah.
Yeah. On the other hand side, we don't see really nothing special on the upside in the UV as well. So hard to see if they are really trading against 4690. But 4690 is still prominent. It's still there. That's really the annoying part here. I was waiting that the price is going to test again 02, 90, 90, 91, 92, and then they has just touched it one time and then they lift it off. That's really annoying. So
SPY.
they are
Sell
again
volume spike.
they're again trying to sell. Look here, 2,400, 3,000 here, by the way, 2,400 here. Some annoying here. I tried a short again here at 47.75. No, no, no. Oh gosh, that's really hard. It's really hard. So I was short here at 07, 700, 701 because simply of this sell sweep. Just wanted to see if the market breaks really down to 92. It was on the way down, not bad, really not bad, but stopped me out again. No harm done, but it was really not satisfying as well. By the way, this is an institutional level, guys. There is no spot gamma level somewhere around. You can, okay, there's one level 3 here above, but these institutional levels are really amazing. why they are trading this along these levels here. We have seen that today as well several times. Simply crazy. So now what's next? You know why I was short here? We have had a very nice sell-off here into this area of the VXX 2050, and then you see the volume traded. I don't know what this is here. Really strange. High volume traded, and then excuse me. So high volume traded here, and then the divergence is there. Retesting with low volume, retesting with low volume. It's hard to say how far they will go here, down or maybe short again, long again here into 2080. That's one of my rationales to say, okay, this is the event, of course, and the retest of the event signalize me a counter position in the selling position in the ES. As well on the UV, it's really hard to say where this is going to, what is this market, so where to enter. That was my rationale for my short here at 70, which went well, but not far enough. I think they need some time to rethink their position. One guy, or there are two guys, 5,400 contracts short. And finally, I'm sure they are going to trade against 4690. Yeah, it wasn't that one. It's maybe going to be this one here. And that's the reason, that's my rationale here. That's simply my rationale to say, okay, you see this high volume trading, then most of the time the market is retesting this high volume area here, building a double bottom, sometimes a triple bottom, and then it lifts off. And mind the liquidity coming in at 2080. There it goes, guys. There it goes. Without me again.
SPY, sell volume spike. PXX by volume spike.
Let's see if he's covering 1000, maybe 2000 or more. Keep in mind he is 5400 contracts short. And Srini, you see how they are adding to 2080 and everyone who is watching VXX.
Yeah, that's the.
I think we should be patient first with this knowledge, with this specific knowledge about this market is, and based on that, what we see based on the analysis of the trade finder, we know 5,400. There's one big guy with 5,400 contract short, and he covered first here. That was the first point. The nuisance is always that they didn't retest it, jumped up again. Now here again, so the poor guy is simply waiting to be filled. It was not much here. It wasn't much. It wasn't very, because there is no. I'm filtering 300 native icebergs. I just only want to see which is higher than 300. So let's see if he is going to be hit here. Maybe we will see several icebergs to what 1000, 2000, and then again 2000, whatever. Because if we see that, then he is an average short at 4700 and he covers 7-8 points below. And look at all markets are red so far. NQ is leading very hard today. And Russell as well, not so much. ES, YM are kind of neutral. So when we look at the correlated markets, look here, very nice to see high volume traded here, retesting with low volume, liquidity comes up at 2080. I mean, that can go through, that's not a guarantee that the market will stop here, but this is for sure a level of interest here. You know, as I mentioned, the hardest part is waiting, and as long you wait, you have to be patient, because this area means something. At the moment, I would like to, if you want to shorten the scalp, then look for a nice spot to sell it into the iceberg, 93, or maybe even for 90 here. Nothing to say here. So really, I hate it. Waiting for the sweet spot here, and then the market is simply trading away here. I mean, you know this DID chapter in the seminar. If you want, you can, when that happens, you can buy it at those points here. That's the most, and it works not 100%, as you can read out of and follow when you see the documentation. But it gives you more than often a good return here, because it's an exact entry. It's a precise entry with a precise stop. And if you want to scalp, then watch for this signals here, for this iceberg developments, because this guy is still simply in the book. I mean, this is his algo waiting, at 93.25 to be hit. You see how they want to sell to trade at 93. 500 sold, bought back. Excuse me. Everything is black here. Do we have some announcements? I don't see anything here. Now here, it depends really on what your personal style is. I mentioned we saw that 1991 was a good support. We have had the same indications today in the VXX here. High volume traded, you see the divergence. You don't need any lines here. High volume traded here, retesting. This 28 is a really good protection. Let me say protection. We have good good liquidity at 20. And they added, cancelled, added here again. Very clear to see. Very clear to watch that. Either you are aggressive, then you take the first shot here as well as here with the DID, or you are a little bit more conservative, as for example I am, and just waiting for confirmation here, maybe to retest and then take a long position here. Yes, I'm glad too, Christoph. So I'm really happy that this was done. I didn't put on my video, my camera, because I look a little bit overtired. Just wanted to disturb you with my appearance here.
Walter, you don't have your TV look ready?
No, I'm sorry. I wasn't in, how to say, excuse me. I was in the mask, so I didn't finish myself. So I'm not really ready for today for the public, for the TV here and for the screen, for the video. No, maybe tomorrow.
I actually have a question for you.
Yeah.
I was running this by Srini yesterday when we were talking about how to maybe if we didn't find a solution to the DX feed. One of the things I was thinking about was you look for those volume spikes on VXX or UVXY.
Yeah.
And one of the things I was wondering is that once you get one of those signals on either one of those instruments and you get a sell sweep or a buy sweep or sell sweep, whichever direction you happen to be looking at the time, on ES in the direction that you want to go as a little bit more of a confirmation that that's the direction the market could be heading. Anybody on your team looked at that to see if there's any validity in that thought process?
Yeah, we are looking. So we have done a lot of tests of on sweeps. So we did a lot of tests with the DIDs currently to understand if we can use the DIDs as for example, for an algo and to trade them. And then the next one is going to look into the volume spikes. So not more into the sweeps, but into volume spikes to see what's the best size, how to utilize them, what's the best size, what's the best time, and maybe what's the best price or tick size. To see where should we lean to. Yes, we have looked at the sweeps, but I can't even remember what was the outcome. I think it wasn't so. I'm not sure. I have to ask. So the iceberg developments and the volume spikes, but it's quite easy. We're just trying to build statistics on all these events here and to see how they are working and whether we can build something like an algo around. Not sure, but we are just looking and testing and doing a lot of stuff here. There are not many signals and there are not many anomalies in the market where we can use what we can use, but we can use these volume spikes for sure, because if we see a significant volume traded at a certain price, then that means that the market gets exhausted, and that means the market must trade back. Maybe there are some poor souls who are trading still low or wants to go still long. This is this small leg up with a low volume retesting here. They didn't find enough comrades to join them, so the market trades back again, and this is really promising. So yes, we are doing a lot of work around this volume spikes, and as I mentioned, the icebergs, not the icebergs, by the DIDs. Of course, these are icebergs, but mostly until we get some results, I will publish only within this the seminar group and not outside. It will remain very privately, and that means that as long as we are doing this work, you should keep this in mind, this volume spikes here, because this is always the same game. It's an exhaustion of the market, and when that happens with a certain volume, the question is now, when that happens with a certain volume, then you can be sure that the market comes to a rest. So either you can't not cancel, but you take your profits, or you open and counter trade. And that's what I was looking here. That was why looking here, and Srini mentioned it as well. Look at this 2080 here. That was really first of all a significant resistance. Then the second one was as well a significant resistance. It was in, let me check that here with the chart. It was where is it? Where is it? Here. At that point, you see how they're very nicely traded up. That was a dynamic aspect development. It was good for several points. Then traded back, and suddenly they traded up for 6 points. That's not bad. That's really, if you're aggressive, then that's not bad. I'm just watching this 91 again, and if I'm unlucky, then I just not touching this 91 and then trading back into 700 and 4700 and 4710 maybe, and even in the VWAP area. Although we haven't what do we have? A mixed market. YM is leading. ES is more neutral. NQ is weak today. NQ is absolutely weak today. So this overview, and that what I was watching and what I'm describing so desperately in the seminar to show you that we need this big not balance, but this balls, this dots here, to see the big volume in the market, and then we can say, okay, is it is it good for a return, for pullback? Is it good to go against it? What is the liquidity above? And as you can see, they are trying to resist at least at 2080. I don't have anything in the UV at the moment, but yes, I'm watching them, and we are totally aware of this few. There are only few signals where we can rely on, and that's the volume spike, sweeps as well. But the sweeps as well, as I mentioned, there's a guy sitting or selling 5,400 contract, and he is serious with the sells. So expect in the most cases, expect the market is maybe coming or trading in his favor. I've seen that in the Discord room several times, that the market is simply not trading in his favor, so it's going 20 points against him. But it doesn't seem to bother him, so he simply sit on his positions, and at the end of the session he is covering, or he covers his position, and that's it. Maybe for nothing, who knows, for 1 or 2 ticks, and even sometimes he is taking losses. That happens. I mean, he might be wrong too, so it's not said that someone, I think that was a discussion where I had with Doug and other colleagues, it's not said that if he is if he sells 5,000 that he must be right. That he must be right. That's not the point. But it's quite interesting to watch this market movements and who is in the market. And this is not hedging. This is not hedging. This is simply some one big guy is coming in, and then look here, covering. It's coming in and then selling at 4,700 and covering 10 points lower. The good point is we can
ESH2.
we can find them all. You see, we can see them on the chart, and that's what Alex meant 15 years ago. It wasn't possible to see that. So he got 3,000. Look here, 3,000 contracts. He got 3,000 contracts, or bought back 3,000 contracts. Let me say it that way. Most probably, we don't know for sure. We don't know for sure. This is not something where we can be scientifically sure. But most probably, when he sold 5,400, I think he is good to cover here again with 3,000. He has 2,000 left, maybe at 88. And he is in the book since 37 minutes. He's in the book since 37 minutes. I just took this 88 here. Point here is, I think this is good for scalping. It's good for scalping because it's coming back here. Come on. That's good for scalping because that's a fact. We want to rely on objective decisions in trading, guys, or ladies and gentlemen. Hi, Karen, sorry. Ladies and gentlemen, we want to rely on facts in the book. And that's what we see. And the facts are exhausted markets. The facts are, I think, this dynamic developments. The facts are to read the market that way that you understand the sweeps and what happens. You see, we have nicely... Yes, we have where we're dividing, or we distinguish between active traded and passive traded volume. Finally, he sold 5,400. That was, I was short here for the first time, then was stopped out, and then took the second trade, which was really obvious because the liquidity was at 46.90. I've got the guts to go long here at 88 right now for scalping maybe 3-4 points or 2 points, whatever. So just to demonstrate it's working. It's not working every time, but it's working. And you have the how to say, the guidance on the screen here based on the trade finder. So he covered 3,000 contracts here at 46.89. And he is trying desperately to get a fill. I would say, let us see if he can get 2,500 here. If you have time, stay with me a few minutes more today, just to see how this will develop here. Look here, 1,300. He is in the book still since 41 minutes, and he is lowering. You see, 46.87.50. His algo is watching for 46.87.50. VIX is rising, HYG is down. $2,000, guys, 2,000. Do your math. I bet that he wants to get 200 more. Oh, 3,000. Okay, 3,000. Fine. You see how amazing it is to read a market this way, and it gives you the best objective view of every market. And by the time when you start to maybe even accept that the market could be read this way, you will see the chances and the sweet spots where you have the best risk-reward ratio, or you will see the best risk-reward ratio for yourself. Let me see the SPY. I don't know what the SPY is doing, so I'm switched off because I have too many screens on here. Yeah, SPY is a little bit harder to read here on my side, and I don't like it very much, so just watching it. But you see all the settings applies as well to the SPY and to all other instruments as well. I have to readjust it. I deleted yesterday everything here. Look here, this was a very nice one. That was a nice one, but it was a down move. So we don't see maybe this. What do you see? 469, maybe, yes, 469 here, but we have 468. What was your reason to go long? It was the DID. It was a dynamic iceberg development. Please go back to the documentation. It was the DID here. The dynamic iceberg development, this yellow line. Maybe you remember this yellow line, and it shows that someone wants to get hit here. Then he didn't get everything. I did a speculative long, knowing that the market is coming back, get 2 points, I think, out of the market, and he got what he wanted here again. So this guy, let's say it is 5,400 or whatever, covered his positions. Let us assume that's simply a speculation assumption, but the logic says he covered here at that point. So he is fine. He's out of the market, and he gets actually 2 times 10 points. That's not bad. That's not bad for a day. And if we want to understand it everything better, so you see the sweeps, the big ones, where we see the active and passive trading, where we see 1,000, 2,000, 3,000. On the sell side or the buy side, both is of course possible. Then we know what the market is doing, what the market is really showing us in real time. You don't need many indicators or whatever. Clean your chart, leave your chart clean. Get rid of add-ons you don't really necessarily need for your trading. Save your money. You see, I have only this, and it's simply amazing how it works. That's absolutely astonishing. But it's not astonishing because you know what we have to look at and what we have to know, and there are only how many? Liquidity, sweeps, volume spikes. What else do we have? Absorption. I don't care about absorption very much. Icebergs, yeah, 4 or 5 points, not more. Thank you very much, guys, for being with us today, and thank you very much, Frank, and all of you, Karen, Julas, whoever contributed to solve this the X-feed problem. That was quite interesting to discuss it with you and to get a better, as well I got a better understanding of these dependencies, because I wasn't aware that we need so much this subscriptions to get everything done and ready. Okay, thank you very much, guys. See you tomorrow, same time, 9 a.m. Eastern time and 15 p.m. European time. Thank you very much, and enjoy your day. Thank you, Jonas.
Thank you.
Thank you. Bye-bye.
Thanks, Walter.
Thank you.